All right, I think we're good this time. Again, apologize everyone. Ms. Adefeko, I can see you. Good morning.
Good morning. Good morning.
Emmanuel, thank you. My apologies for these things can happen from time to time. We just have to tweak the settings a little bit. Taria, good morning. Do you mind if you can just quickly test your video so
Good
we're
morning,
sure
everyone.
everything is fine?
Good
Good
morning.
morning. Good morning. Andrew, it's good to see you. Good morning. All right.
Good
Hope,
morning.
good morning to you as well. Do you mind just testing your video for a moment so we're sure everything is working as it should? Okay, excellent. All right. Okay, great. I think we should just allow another minute or so for others who jumped off earlier to jump back in. Again, sincere apologies for that technical glitch there. All right, I think everything is working as it should. We can all turn off, switch off our videos and mute ourselves until we are called on. I think we are ready to go now. I see we have just over 50 people. I think I'll just wait for another minute or so to allow those who couldn't get on earlier to do so. All right. Oh, okay. Yewande, I see your message. Are you still struggling with that? Oh, I think I know what the problem is. Okay. Ayo, if you can hear me, I'm not sure why, but I think we need to upgrade Yewande Sadiko. For some reason, she is appearing as an attendee. Can you quickly help us do that, please?
Okay, I'll get on it.
All right, thanks so much. Sure, I see you. Good morning. Okay, I think just another minute or so. So we'll allow everyone that should be here to join us. I haven't been able to find.
A minute, please. A minute, please.
Okay, all right. Anyway, she's not speaking until a little later, so I think we still have some time to fix that. But we're already running behind schedule, so I think we should kick things off now. All right, Funsho, I see you. Good morning. Do you mind just turning off your video? We'll call on you a little later. All right, and of course, mute yourself. Okay. Okay, great. Yolande, I see you. Wonderful.
I'm properly connected now.
Yes, thank you so much. I think we are good to go now. Always great to see you. All right. Do you mind just muting yourself and switching off your video so I can get things going? Thank you so much. Just need a second here, and we should be ready to go. All right. Well, these things happen. It is the tech era, and sometimes it doesn't work exactly as you planned for it to work. But I think we are ready to go now. So I want to say a very good morning to everyone, to all our speakers and guests, our panelists, and of course our sponsors and
Thank you.
supporters.
Babu Yanzu is okay.
You're all welcome to this Arbiters webinar
Hello.
series. And today the focus is on the African Common Free Trade Area, revamping Nigeria's infrastructure for global trade. That is the theme that we are hoping to unpack over the next 1.5 hours or so. My name is Wale Famrewa, and I have the pleasure of moderating the session. And just some quick housekeeping so we can get right into it. Again, I apologize for those who are unable to, for the break, we had to restart this because we had a small technical glitch. But I'm happy to see that at least 100 people have already joined, and I'm sure those numbers will continue to increase as we progress. But I'm really delighted to be moderating this session. I should open things up by saying a big thank you to our sponsors, Nigerian Export-Import Bank, Nexim. We really appreciate your support in helping us put this together. And of course, Fenchurch Power, who is also supporting us today. And as we unpack this very important theme, we really appreciate your support in making it happen today. We have people joining us from across the world. What we've done today is to create a very diverse group of entrepreneurs, investors, industrialists. We have people in the agro-allied sector. We have exporters, no doubt. We have those in manufacturing and in other forms of industry. And of course, many who are providing the infrastructure that is needed for Nigeria to really compete on the global stage, especially in the context of the African Common Free Trade Area. Now, it's no longer news to everyone that on the 1st of January 2021, the African Common Free Trade Area came into force as the largest single trading market in the world in terms of the number of participating countries since the establishment of the World Trade Organization way back in 1994. Now, the UN Economic Commission for Africa estimates that the agreement will boost intra-Africa trade by as much as 52% by 2022. But of course, doubts remain about how prepared Nigeria is to compete on the continental, not to speak of the global stage. And today we'll be unpacking a very important element in helping Nigeria compete in this new terrain. Of course, it is infrastructure. Infrastructure is diverse. It's everything from roads to ports, and of course, logistics and power. And we'll be touching these themes, and we have a very great lineup of speakers who will be helping us unpack this. Just some housekeeping. The session is being recorded for your information. And what we've tried to do with today's program is that we've tried to flip things a little bit. Now, typically at these webinars, you have a moderator who is posing a lot of questions to the panelists. But what we've tried to do this time is to make this more about the audience. And I've tried to describe the type of audience we have. I know there will be quite a few other people who do not necessarily fall into the buckets that I spoke of, but you're enthusiastic to know more about how prepared Nigeria is to compete on the global stage, and you will have your questions as well. So what we're going to try to do is that we're going to make the conversation more about the audience, and we have a very diverse and distinguished lineup of speakers who should be able to unpack that. But to kick things off, I'd like to now welcome, and before I do that, I was just going to say concerning the housekeeping that we'll be taking your questions, and please do your best to type in your questions in the Q&A field. I know there is a chat field, there is a Q&A field on the Zoom platform. Please find the Q&A field so we do not lose your questions in the chat and the conversation that will be going on as we progress today. This event also is designed to stimulate networking for us to all connect as a community that are enthusiastic about this theme, and we encourage everyone to share their information, of course, responsibly and carefully, but we hope that we can facilitate some useful conversations and connections over the course of the next 1.5 hours. But without further ado, I'd like to now welcome our first speaker today. I mentioned that the Nigerian Export-Import Bank is our headline sponsor for this event. And I'd like to, without further ado, welcome the CEO of the Nigerian Export-Import Bank, Mr. Ababelo, who is being represented today by the technical advisor to the CEO, Mr. Hope Yongo. So, Mr. Yongo, if you are with us, the floor is yours for a few comments as we progress.
Okay,
Mr. Yongo,
thank
if
you
you can
very
just
much, Wally.
unmute yourself and turn on your camera. Yes, go ahead. Can you
Okay.
just turn on your camera so we can get to see you as well?
Okay.
Wonderful.
Yes, thank you so much, Wally, and thank you, distinguished speakers and panelists and the audience. May I first and foremost extend the apologies of the MD, who is out of office and has requested that I stand in for him. But nonetheless, we welcome this partnership, and AfCFTA, which is a trade in the African continent, I think is Nexon's bread and butter. So I think we are happy to participate in this. And just by way of introduction, let me say that we all know Nexon as an export credit agency and export development bank. What we do is provide export credit facilities, export credit guarantees, export credit insurance. And for Nigeria's participation under AfCFTA, we are also redefining and re-strategizing some of our instruments, especially that will help in trade, intra-African trade. And one of those instruments is the export credit insurance instrument, which very soon will reintroduce to the market, and the investment guarantee instrument. So these are some of the things that we are doing. And with regards to what is being the topic for this webinar, and I think it's about infrastructure development, conversation around that is welcome because we know the challenges impacting trade, especially Nigeria's intra-African trade. And let me just say upfront, we know that our strength of Nigeria's export in Africa is manufactured export. So I think it's being impacted for myriad of reasons, but some of the things, and I think our panelists and lead speaker will highlight it, maybe, is around the infrastructure, the hard infrastructure, which is the issue of logistics gaps and trade connectivity, the issue of quality insurance and quality assurance and quality certification and control, the issue of cold chain solutions so that we can help promote and advance on our primary agricultural export, especially like onions and ginger, fresh ginger. And there are also issues of soft infrastructure because we are looking at how will the financial system create some financial infrastructure and instrument. One of the things we are looking at, I think, which will help in the conversation right now, is the issue of introduction of factoring services that can provide a window of financing SMEs from a non-banking financial perspective. And then the issue of providing credit insurance market that can help in some of the factoring activities that we are looking at. And then some of the other sub-infrastructures, what is the national quality infrastructure framework like? Is the quality infrastructure policy in place? And if it's not, what do we need to do to make sure that it comes? Because yes, NAFDAC is there, SUN is there, SUNCAP and everything is there, but the issue is that if somebody's buying maize in the market, what grade of maize is there that people know, and how are they graded and priced? These are some of the fundamental things that if we get it right, it will reduce the rejection of our commodities in the international trade arena. And then the issue of commodity trading system. Do we have the commodity exchanges are there, but is it effective? Can people trade? Can people use the instrument? So some of the legislative framework, like the warehousing financing, is it in place? And if it's not in place, what advocacy can be done? So these are some of our thoughts. And then finally, maybe the payments and settlement system. Because with Basel III and with most of the correspondent banking going out of Africa, how will it impact trade? So I know AfriExim is doing something. Maybe Emmanuel Isieka will say something about that, but these are some of the things that we need to look at it from the perspective of hard and soft infrastructure. Just in closing, and thanking everybody for participating, maybe I can just share that, yes, what is Nexim also doing in trying to make sure that Nigeria participate effectively under the AfTA. For the hard infrastructure, Nexim is promoting regional sea link, and one of the things is that it will promote coastal and interland trade, and it will help diversify our export basket with bulk commodity capabilities. So we'll be ready to answer questions on that. On the issue of the soft infrastructure, like I said, Nexim also promoting the introduction of factoring services in Nigeria. We work with AfRexim Bank, Factor Chain International, and the CBN FSS 2020 and other stakeholders to make sure that factoring services introduced. The good news is that the bill is before the National Assembly now. It has undergone its first reading. But while we are waiting for the enactment of the law, and I think our advocacy is on for CBN to issue regulation that will help guide and streamline factory services in Nigeria for the promotion of trade. I thank you so much, and I think we look forward to further engagement, and I welcome you all. Thank you so much.
Thank you very much. Hope for those short but very important messages from Nexim to sort of set the tone for what should be a very interesting conversation. I really appreciate your support in sponsoring today's event. All right, moving on, I'd like to now welcome our first speaker, and I will allow him to say a lot more about what his organization does. Hope has already alluded to the fact that it is linked to the AfRexim Bank, but please join me in welcoming the acting CEO of the Fund for Export Development in Africa, Mr. Emmanuel Asiak, who will be delivering a keynote address to further set the tone for our conversation today. And as Emmanuel gets ready to speak, I'd like to just acknowledge the questions that are already coming in. Please keep them coming, and we're going to try and run through as many of them as possible. Hopefully, they're all relevant to the conversation that we're having today. But on that note, I'd like to now welcome Emmanuel to deliver his keynote address. Emmanuel, it's over to you.
Thank you very much, Mr. Famuro. Good morning, distinguished panelists, and also distinguished ladies and gentlemen. It's my pleasure to be part of this very important meeting today. And I'll be walking through this very quickly, but I reckon that the material will be available for people to also look at. What this initial presentation is really just to set the context for the conversation that this very rich panel would be getting into, and then answering your questions as we move along. So in thinking through the presentation today, my view was that it's probably best to start from what we think about as pillars of competitiveness. Remember, we're talking today about trade, we're talking about infrastructure, we're talking about how Nigeria can compete. So we thought that, or I thought that a good place to start from was really to look at what the World Economic Forum defined as competitiveness from a global perspective, because it helps to think from that perspective. Now there are 12 pillars that have been identified, and we're not going to go through all of them. I mean, you can look at each of them. This is like a scorecard, which mirrors how you're performing as an institution or as a country, within the League of Nations, basically. So the first one is institutions. When we talk about institutions, what are we really referring to? So we're talking about the legal and administrative framework within which individuals, firms, governments interact to generate wealth. So the question to ask is, within the institutions that you're dealing with, is there bureaucracy? Is there excessive regulation? Is there corruption? Is there dishonesty? Is there lack of transparency? Is there lack of independence of the judicial system? So can people enter into contracts and be sure that those contracts will be enforced? Those are some of the consideration where you're thinking about institutions. The next one is infrastructure. And of course, we all know there's the hard, there's the soft. And my colleague, Mr. Yongo, had actually hinted on some of those. So we'll go through most of these, but I thought that the best place to start from is to basically have this framework within which we can then build other conversation on. Now, irrespective of where we are, I like this quote by the great Mandela. He said, after climbing a great hill, one only finds that there are many more hills to climb. So the question is, wherever Nigeria is today, we still have some room. We still have some improvement to make. So with that, I get right straight into Africa. And when thinking about trade from the African perspective, you would find that many African countries still rely on the export of raw commodities to generate export revenue. Indeed, only 2 countries, Morocco and Tunisia, have manufactured products as their leading exports. Now, the implication of this, what does that mean? It means that Africa significantly lacks the rest of the world in the production of consumer and capital goods. In effect, more than half of Africa's total exports are raw materials. And indeed, you also know that these raw materials find their way back into the continent as finished products, and then we pay significant premium on that. Of course, that means that the effect we're seeing, because the spiral effect on the balance of payment, balance of trade, and then effect on currency and the volatility, that occurs in these commodity prices is part of the reason that we're seeing African economies remain the way they've remained. Now, this slide, it presents much more information, just a deeper dive on, the point around Africa's, resource endowment, how rich it looks. But then, if you still look at where value addition is, it's still far from where it should be. For example, so Africa's share of global export in the extractives is about 33%, but the share of Africa's share of global value-added exports in the same industry is only 11.3%. And if we then deep dive into the specifics, we then say that we see that agricultural commodities tend to suffer much more from this mismatch. The case of cocoa is particularly poignant. So you look at Africa boasting of about 76% of global raw cocoa production, but only 21% of this production is semi-processed into ground cocoa in Africa. That means that actually less than 1% is actually produced into chocolate. So why do we have to ship out cocoa butter, ship out cocoa paste into Europe and then import that back as chocolate and pay so much money for it? That is something that is a bit of a challenge. And you can draw parallels, whether it's Africa or you're coming back to Nigeria, it's the same issue. Again, what this slide does here is to then point us specifically to numbers, begin to relate, the relationship basically between commodity price index and Africa's GDP year on year, and we can see direct correlation. What this says is that we are, continually, going round the same circle, saying the same thing as Africa year in, year out. But something has to be done, and we'll get into that. And I guess part of why we're having this conversation is really to ask ourselves, what should we do to begin to change the story of Africa? Now, if you even pick certain commodities, like you find on the lower part of that slide that you're looking at to the left, look at cocoa, for instance. I've talked about that. We still play hugely in raw production. The same thing goes for most other products. So when you do the analysis of value add and what it translates to for every $1 value add, you see the table on the right. You see the commodities suffer quite significantly, from this mismatch. An example here, the worst hit is cocoa, followed by gold. So we basically are producing these things, but value is not returned within Africa. What we have to show here is intra-regional trade. Most people are familiar with the fact that Africa, maybe from our colonial history, we haven't traded enough with ourselves. So you see that in terms of Africa trading with itself, we're doing that about 17% only. When you compare that to Europe, European Union is about 70%, and then Southeast Asia is about 60%, and the Americas is in the mid-50s. So what are we going to do? The common free trade area, the continental free trade area, opens up an opportunity for Africa to interact more and begin to drive up that ratio, to become more competitive, with the rest. And it's even more instructive when you even step into even recognized trading blocks, or what you may call economic blocks within Africa. An example is COMESA, example is ECOWAS, which we all know. You find that, just picking ECOWAS, for instance, only 9% of trade happens between countries within the ECOWAS bloc. So we do much more with the rest of the world than we do with ourselves. And I believe that, the continental free trade area that is being implemented now creates a real opportunity for that to be solved. Now, if we look at this next slide, it's a sad one because basically we are seeing what the effect of the nature of our trade or the nature of our interaction and what has created value leakages from our system as cost. So you find that Africa records the highest unemployment rates in the world, the lowest standard of living, and of course the highest poverty rates. Of course, Nigeria has its place in that as well. So the reason we are starting out from Africa is then to allow us in our interaction and in our conversation, begin to then find solution to what this could mean for Nigeria. Apologies, I have a bit of a technical glitch, so my slides are not moving again. Just 1 minute, please.
Okay.
Okay,
Right,
great.
there you go.
Okay, great. Thank you so much. It was just a hitch. So the World Bank itself, has acknowledged the fact that, the poor infrastructure in Africa is at least as large as, the challenge that it creates, for the countries is as large as what comes from crime, from red tapeism, what comes from corruption, what comes from financial market constraints. So this shows how serious the issue of poor infrastructure is, and we'll deal with that as we go on. Now, this slide is something that most people here are familiar with. So why do we have where do we have the gaps in the African trade ecosystem? So structurally, we have a gap, in infrastructure. We talked about the soft and hard. We also have a gap around funding. So we're seeing, funding coming into Africa, not diverse enough to address the specific areas that should be creating that value release, or basically moving Africa much more from the raw commodity production to being more competitive by getting into manufacturing, which Mr. Yongo spoke about earlier. We also know that there are financing instrument gaps. That's a big problem, of course, sectorally as well. People pick sectors, as we'll see subsequently, that they invest in because they invest for returns as opposed to investing for impact. And of course, you cannot critique that. People are out there, for returns. But some of the institutions that we are creating as Africans, have to solve the problem of Africa. Now, let me move on just in the interest of time. These slides will be available for people to talk about. Now, we can talk about the challenges. We can, analyze where the issues are for Africa. But the question is always the fact that, until we begin to write our own stories, until we begin to deal with our matters, until Africans solve the problem of Africa, we can continue to talk about the challenges. So I like the quote here that I borrowed from Paul Kagame. He said, Africa's story has been written by others. We need to own our problems and solutions and write our own story. So the effort that you see that I'm going to get into now, specifically speaking about what institutions like Afreximbank is doing in the market to deal with some of this, is part of that rewriting our stories, owning our problems and writing our stories ourselves. Now, before we get into that, I thought a good place to start from would be to quickly look at what the Africa Continental Free Trade Area is seeking to do. So the proposal or the agreement proposes to progressively abolish tariffs on goods traded by partner states over the next 10 years. This will then remove a key structural barrier to the growth of intra-African trade that have made it more difficult for African countries to trade with each other than with other countries. And of course, we saw that on other continents. We saw that with some of the data that I presented earlier. So the removal of the trade tariffs, coupled with other provisions aimed at fostering regional cooperation and promoting economic integration, is expected to then result in about 53% increase in intra-African trade, and grow Africa's global trade from the contribution of Africa to global trade from the current 2% to about 6%. So that's what we're looking to achieve with what this great initiative is about. Now, bringing it home to Afreximbank, African Export-Import Bank, as you know, is the trade bank for Africa that was set up, to basically support trade on the continent in a manner that would transform trade over time and move Africa from where Africa currently is to where it should be. So Afreximbank is owned by 51 countries in Africa, Nigeria inclusive, and the bank has done a lot over the close to 30 years of its establishment. And one of the things I should note is that between 2016 and 2020, over $40 billion has been disbursed by the bank into separate buckets of financing opportunities in the trade area. Now, Afreximbank has a number of initiatives that have been put out there that are dealing with some of those, basically addressing each of the components of the challenges that I spoke to earlier. One of them is the Intra-African Trade Forum. The bank organizes that forum, and that enables parties, stakeholders to come together and interact and then trade. Significant deals are signed. In one meeting, over 19 billion worth of deals were signed. So these are the kind of things that Afreximbank is doing. The second one that I would like to refer you to is MANSA. MANSA is a depository. One of the challenges you have in the environment is that of information. Due diligence, parties don't find reliable information to use when they're appraising opportunities. So we're setting up a depository, and that has been launched, and gathering information. Some of you on this call may have been involved in one session or the other relating to that. Another one that I want to point out is PAPS. What PAPS is about, this is the Pan-African Payment and Settlement System. What this is about is a platform where, Africa will be integrated from a payment perspective as an enabler of trade. So what that means is that someone in Nigeria that is looking to import something from Kenya would, pay in Naira, and the person in Kenya will receive in shillings. So you don't have to travel all the way to New York to exchange dollars and then, get that trade settled. So Afreximbank is doing this. This is being launched. A number of countries have signed up to this as well. So we see this as something that will facilitate trade significantly. Now I'm bringing it specifically to my own space, which is Fund for Export Development in Africa. This is a fund that has been set up to invest equity. Remember, the bank is dealing with debt, but we have been set up as a subsidiary of the bank to invest equity. And our equity investment, is going to be targeted at achieving three things. And I'm going to speak more to this. The three things that we're looking at achieving, investing our capital, are as follows. We want to support companies, businesses that are involved in the intra-African trade value chain. So that would assist grow the number that we saw, that 17%. We want to get that number up. Number two, we want to support companies with equity or quasi-equity funding, companies that are involved in some value addition. So if you're today producing cocoa and exporting cocoa pests, we want to work with you to then make you and enable you to produce chocolate, for instance, and export chocolate. So that's what we're here to do. Number three, we're also here to support businesses move, basically forward integrate from just raw commodities into industrialized product, even if they're traded locally or regionally. So those are the three major objectives. In terms of our vision, we're looking to be that fund that is specifically focused on transforming Africa structurally from a trade perspective. Of course, we have a lot of private equity funds on the continent, but people are looking for risk and reward. We are not. We first of all ask ourselves, in capital that we are going to deploy, what is going to be the impact of this on Africa before we then talk about returns. So that's the difference between ourselves. And then we have Afreximbank behind us. We've been seeded with capital of about $300 million. and of course, different buckets of initiatives take on that capital. But for equity specifically, we have $100 million today that we're working with. We're a new institution. We're just about 18 months old, but we're actively looking at opportunities to deploy capital, and we've taken this through our investment committee process already. And there are some that we may be closing in months to come. So just speaking more about ourselves, what sectors do we invest in as FEDA? We are sector agnostics. That's how we like to describe ourselves, meaning we invest in every sector, provided we can find an angle to growth in intra-African trade or growth in value-added export outside of Africa. So the three sectors that we would exclude for now, two of them are in the extractive, so we will not invest in oil and gas for now. We will not invest in mining for now. And then the third is power. The reason we don't invest in these three is that they don't lend themselves directly to these objectives that I told you about that FEDA is set up to achieve. However, if you find opportunities and there's an angle, for instance, power, if you're providing captive, power into, say an economic zone that is enabling export, of course, we can look at that, but we may not be able to invest in power just for the sake of investing in power. Now, in terms of our criteria, if you're familiar with how equity capital is disbursed or invested, by private equity firms, we are there to do exactly the same thing from, equity instrument perspective, but approach to investing is going to be a little different because we're focused on, like I said, impact and development. So currently, we can invest anything between $5 million and $20 million, and we're also working on a solution that will enable us come down on that lower size of the ticket and be able to do more with the market, because we find that the number of opportunities probably need less than $20 million. In terms of stake, we're looking to invest for significant minority. We don't go for majority. We like our promoters to retain that. And we invest for, a period longer than most equity firms will. So we're looking to invest for between 7 and 10 years and actually can look longer based on, our mandate we're looking to achieve on the continent. Another thing, and I would like to, use this as we round up gradually, the situation that Kwame Nkrumah cited here, he said, we face neither east nor west, but we face forward. So we're not looking to the sides at all, we're looking forward. So for us in Nigeria, therefore, what is the way forward? And we have a very rich panel here, very experienced people who will bring a lot of experience into the conversation today. But I just thought we should start by just highlighting a few things that will be important as we have this conversation. The first point to highlight here is the fact that Nigeria today is highly reliant on export of minerals, particularly oil and gas. And of course, we import finished goods, and that story is known by everybody in this room. If we take a deeper look in how we trade, in who we trade with, and all of that, everything points to us dealing with the outside of the continent as opposed to dealing with the inside of the continent. And to reverse this, of course, we have this conversation today. Now, this conversation won't be, or this presentation won't be complete if we don't look at this slide, which basically says, what are the key performance indicators that we can look at from a competitiveness perspective. So the World Economic Forum and other bodies have defined certain criteria that you use to look at countries. And if you look at Nigeria specifically, let's start from the soft infrastructure. If you look at Nigeria, from the global perspective, global competitive index as at 2019, and advisedly used most index, for 2020, but this very one we use 2019 in this case. Look, Nigeria ranked 116 in the world, and then 16th in Africa. So in Africa itself, we are 16. That means we have a lot to go. However, we had improved on that globally from 125 in 2018. Ease of doing business, we all know this. We're on 131 as at last year. That's up from 146. Some improvement there. Remember what Paul Kagame said, or rather, remember what Mandela said. We still have more to do there as well. So we look at corruption index. This is corruption perception index. Of course, arguable, but it does show that we still have a lot to do on that side as well. Logistics, getting into the hard infrastructure side, logistic performance index, we are 103 and 13th in Africa. Global connectivity index, we are 76 in the world and 9th in Africa. Africa infrastructure development index, we are 24th in Africa. So you can see where we are ranking. Out of 54 countries in Africa, we are somewhere in the, we are sub 10 most of the indices. So we have a lot of work to do, a lot of work to do. So here is just bringing all of this together, and really saying, where do we want to get to? How do we want to get there? And we've called out a few things here to say, what are the things that are most important? Things like enabling environment, how do we ensure that our institutions get stronger? How do we ensure that infrastructure is where it should be? How do we work, to ensure that IC adoption grows? How do we get to a point where there's macroeconomic stability to be able to even attract investment into Nigeria? That is something we need to look at. And of course, human capital, brilliant people, great talents in Nigeria, but we need to then see how to develop that further, and how to use that and to avoid the whole brain drain situation that we are seeing happening. So the goal, of course, is to push all of these buttons upwards and ensure that Nigeria becomes more and more competitive. Now, finally, the question, these are more questions than answers, and this is just to get the panel to get ready to talk as we get into the discussions. The big question is, how can Nigeria, compete more with industrialized countries on the African, or compete with more industrialized countries on the African continent to benefit from Africa? So how can we compete more? Then the next question is, what are the specific areas that hurt Nigeria's global competitiveness score, and how can they be addressed to attract investment into sectors that will promote trade? Number 3, what are the soft and hard infrastructural gaps in the country, and how can these be addressed? Finally, what are the financing instruments and sectoral gaps in the Nigerian market? How can funding sources be diversified, and which sectors should we prioritize in order to boost the Nigerian trade? Now, some of the slides that I missed, you can take the benefit of looking at them. You find that funding over time has sort of traveled more into the financial services area, has traveled more into ICT, in communication and telecoms. It has also gone much more into TMT and other areas that we are not getting the full benefit. Is gone away from manufacturing for obvious reasons. There are certain things to the bottleneck. Some of those are the infrastructure conversation we're having today. So I do hope that some of these questions we've posed and some of the data we've shared would help us as we get into the presentation. Thank you so much.
Thank you very much, Emmanuel. Quite comprehensive. You've covered quite a lot of ground, and I think it has really set the tone for us to transit to the panel conversation. I can see you've also left a few questions for us to consider as well. So as we go on, hopefully we can touch those as well. Thank you so much for that. I know you are very busy, and really appreciate you joining us today. All right, moving on now, we would like to invite all our panelists to join the meeting, and in no particular order. I'd like to just welcome them to turn on their cameras and allow all of you to see them. I won't give a very elaborate introduction because of time, but what I will do is I will allow them to speak to what they do, even as they make their contributions. Starting with Mr. Olusegun Awolowo, who is the CEO of the Nigeria Export Promotion Council. Thank you so much for joining us today, sir. We also have Tariye Bade-Gessin, who is the CEO of the ARM Harriet Infrastructure Investments Fund. We have the pleasure of Yewande Sadiq, who is Executive Secretary of the Nigerian Investment Promotion Commission. We have Mr. Andrew Nevin, Chief Economist at PwC, actually Dr. Andrew Nevin, apologies, Chief Economist at PwC Nigeria. We have Mr. Ade Feko, who is Vice President, Olam International, and also the Chairman of the Agri Group of NASIMA. And last but certainly not least, we have Mr. Funsho Adeyemi, the CEO of Fenchurch Power. So as you can see, it's quite a diverse group, and they are all ready to chime in. At some point as well, I imagine Mr. Yongo from Nexi may also contribute to the conversation. So it's always important to start this on a very strategic note. And I'm thinking so that it sets the tone nicely and hopefully um, directs us in terms of the path that we'll go. Because the whole theme of infrastructure is so broad. We can touch it on so many levels. But I'd like to ask Tarie to begin. Tarie, thank you so much for joining us today. Really appreciate you being part of this. And maybe you can give us your perspective on investing in infrastructure from your viewpoint as a fund that is dedicated to doing that, specifically with respect to trade related infrastructure. So everything from logistics to ports to whatever is trade related. What in your view has been possible in the tough terrain called Nigeria, and what, in your view, could be great opportunities for those who are looking to take advantage of the African Common Free Trade Area? Let me use that to set the tone for a very engaging conversation. Tarie, it's over to you.
Sure. Thank you, Wale, and thank you very much to the organizers. And thank you for having me here today. It's a pleasure to join the panelists and AfrEXIM and Nexim in this very important conversation. Just a quick introduction. ARM Harris is an infrastructure private equity fund focused on West Africa, based in Lagos, and we manage capital from domestic pension funds as well as international capital. And we've been investing for several years now in the Nigerian market, as well as the West African market in large scale infrastructure. And we also have quite a bit of experience in toll road infrastructure and other forms of infrastructure. I'd like to just take a step back to speak about why infrastructure is so relevant for the promotion of trade within Africa. And it ties very significantly to some of Emmanuel's points on competitiveness. What we've discovered, I think, as all of us have been investing in infrastructure for many years now, is that the cost of infrastructure in Nigeria is extremely high because there is so little of it. And so you can imagine the cost of energy in Nigeria is higher than many of our peers in Africa. Also, very importantly, the cost of transportation of goods within Nigeria is significantly higher than even the cost of transportation from an external market into Nigeria. And so that's very significant, this issue of the cost of transportation. And there's some very interesting data around how much it costs to move cement across the country or to move agricultural produce across the country. And then this is also further worsened by the lack of, could be cold chain and more forms of nuanced infrastructure. So for Nigeria to be able to compete with other more advanced African nations, but also to be able to benefit the most from the African Continental Free Trade Agreement, we do need infrastructure because it's fundamental to our competitiveness and reducing our costs to serve the markets and to produce for these myriad markets effectively. And now, how this coincides with our work is that while historically we've invested in infrastructure that's much more sovereign-backed in nature, where you do a large-scale utility with a sovereign or a large-scale power project with a sovereign linkage, there is an increasing opportunity to support commercial and industrial players that need energy solutions, that need more effective logistics solutions, and really to support the emergence of a manufacturing or commercial class that will serve under the African Continental Free Trade Agreement. I mean, everything from manufacturing even to digital or data centers, all of these need energy, and they also need logistics, and they need, you need a road network. So we are very interested in the opportunities that the new trading bloc presents, because of the opportunity to invest in infrastructure solutions that serve private operators, both from an energy and logistics standpoint. But ultimately, the same way we all say that the public sector cannot fund infrastructure alone, the private sector can also not fund infrastructure alone. There has to be a partnership. And so we can, as an infrastructure fund, support industrial and commercial players on certain infrastructure nodes, but you still need infrastructure to scale. We are going to need roads that connect various countries. So we're going to need cross-national infrastructure. We're going to need ports that tend to be high cost. We're going to need transshipment hubs, inland ports, etc. And so the need for public-private partnerships to deliver infrastructure at scale to support opening up these markets from an infrastructure perspective is crucial. As an equity fund, we are very happy to invest into public-private partnerships. And as the trading region or trading bloc evolves, we're going to be very happy to look at investing in PPPs. But for now, our focus has been on commercial and industrial energy and infrastructure at somewhat of a smaller scale.
All right, thank you so much for that. But if I can just quickly follow up, and you can make this a bit brief so we can get to some of the other questions. What about logistics? How do you see that space evolving? And potentially, would you be investing in that area?
Sure. Well, I think there's some fundamentals around logistics in the infrastructure landscape: roads, ports, and rail. There are tricky aspects to this, at least with rail. Sovereigns tend to be best suited to finance the rail underlying infrastructure, and then the private sector can support the rolling stock. And so we're very open to doing that. However, it's very important that the strategies around rail are overlaid on trade. And so, one of the challenges you find is sometimes rail is designed to support passenger traffic versus cargo traffic. And so the design of the rail network and the investability from an infrastructure standpoint, it's more viable when you're supporting cargo as a private investor versus passengers. And so there's some key nuances around that. In terms of ports, we are looking at port infrastructure, both large scale and some of the transshipment opportunities, both the smaller ports as well as inland ports. But again, inland ports are only really viable when you have a scaled transportation network such as rail to connect the seaport to the inland port. So scale is so important when it comes to logistics, to be able to share those costs across multiple parties. And then of course, roads are of interest. We have been quite successful in the road sector. As you're aware, Nigeria is seeking to privatize several roads under the Highway Development Management Program sponsored by the Ministry of Works. And it is an interesting sector. However, again, not all roads will be easy to bank commercially. But of course, roads that are dealing with fundamental trade arteries are very interesting and could potentially be bankable.
My apologies, I didn't realize I was muted. Thank you so much for speaking to those themes. All right, so as I mentioned earlier, what we are trying to do today is to make this as much as possible about the audience. And so I'm going to try to get into some of the questions that were submitted earlier before the event, and then also speak to those that have been submitted as we've been moving ahead with the conversation today. So my first one would be going to, I think I'll pose this one to Mr. Andrew Nevin. Now, this may be a tricky one. Andrew, thank you so much for joining us. And this is just reflecting on how strategic Africa and maybe to some extent Nigeria is about its engagement with other sovereigns. So the question is, China is adding to Africa's unsustainable debt while making billions available for investments in infrastructure, and has also become a big exporter of the sort of simple manufacturers African countries should be making and trading with each other. So the question is, how will Africa deal with China? And that is from Dr. Olabode Agombiade, who is a partner at ATACOFF. That's an acronym for something I'm not sure of. But Andrew, do you want to take a quick stab at that?
Thanks, Wally. So I'm not, you give me the most difficult question. Let me start out by saying just great kudos to AfCFTA and Nexim for all of their efforts on these issues around the content. I mean, people have heard me speak before. I sometimes stand up and say AfCFTA is the most important institution in Africa, and I firmly believe that. And many of the things Emmanuel spoke about are just fantastically important, including the idea of taking the US dollar out of the trading system. That is something that is so essential to be able to trade in local African currencies. But let me address the China issue. I mean, people that know me know that I went to China the first time in 1983. I lived there for 10 years. I speak, or used to be able to speak Chinese. But I've come to the last decade in Africa and Nigeria, and I need to say, I am very negative on China and very concerned about the relationship between Africa and China. When we look at sort of kind of Western liberal democratic values, we look at the direction that China has taken in the last 15 years, very concerning, whether it's Xinjiang, Hong Kong, social control, South China Sea, all issues that, at least from the West, we view with great suspicion. So I think that from an African viewpoint, it is also a great concern. I mean, I don't think there's any reason to think that China has Africa's interests at heart. They have an incredible demand for raw materials. This whole discussion is about moving away from the export of just raw materials. And China's willingness to kind of bend the rules that people, other countries might play in terms of their relationship with Africa is a problem. So I think it's a very good question. I think the response I would say, and I've said before to this, is Africa, first off, one of the reasons that the AfCFTA is so critical is so that Africa can stand up as, what will essentially be the largest economic bloc on the planet. So it's a strength from unity. But Africa should be having economic and commercial and political relations with each bloc. So, I mean, I've said many times in the past, India is a very natural, perhaps the most natural commercial partner for China. Europe is continue to be incredibly important for China, the United States, and of course I'm Canadian, North America as well. Even a country like Brazil is very important to that. So I think that the advice I would give is, let's try to de-emphasize commercial relationships with just one trading partner. The debt issue is out there. We need headline GDP growth to prevent the debt from overtaking the continent on that. But the best path forward is not to become over-reliant on any one trading partner.
Got it. Thank you so much. I hope that answers the question. All right. So there's a question here that I think Mr. Adefeko and also Mr. Awolowo can chime in on. This is from Adewale Adeotoye. He's saying, owning cash crops farms of corn and cassava and okay, I think this person owns cash crop farms, and he's probably farming corn and cassava, and he's looking forward to cocoa and rubber. And the question is, how do I make my farm products exportable? There's a lot of marginalization in achieving this, such as high costs of transportation, of course, insecurity, and a lot more. So, Mr. Awolowo, I think these are the pains, if you like, growing pains of many entrepreneurs who are looking to, who find the whole concept of exporting crops attractive. But what would be your message to this person? Mr. Awolowo, if you can unmute yourself, that was for you.
Yes, good morning, everyone. And let me thank Arbiters for organizing this. I see my sister Yewande Hanade there, so please hello to everybody. Let me start immediately. I'm looking at some of the questions you have, and if you allow me to quickly share my screen and show you a few things, just I think 3 slides, then that will set the thing for my conversation. Am I able to share a screen?
You should be able to. Are you trying and you're unable to?
Okay, now I'll just try. Now I wanted to ask first.
Yes, you can. Please go ahead.
Okay, let me see. Yes.
Yes.
Okay.
It's coming up.
Okay. First, we're looking at the African Continental Free Trade Area, which is a market of 1.2 billion people, GDP of 3 trillion. So this is a serious trade for the first time is the largest trade bloc in the world now, as we speak. So very extremely important. Now, the second slide is just to invite Tari into this, because we're running at the NEPC what we call zero oil plan. And the zero oil plan is that Nigeria must and can survive in a world where she no longer trades oil. And as audacious and as impossible as it sounds, we say, look, we identify 22 sectors. This is where Nigeria must concentrate. And part of what we did to them, because I had Tari speak on this, was what we call our field to export transport corridors that need to be developed with the infrastructure. And you can see it. You see the red transport corridor all the way from Castina, will trade it to Lagos Port with the various inter-corridor linkages all across it. Then we have the blue transport corridor all the way from Maduguri to Calabar Port and Port Harcourt Port. So with the various rail links. And that's what we submitted to the federal government. And a committee was set up, National Committee on Export Promotion, and it's to implement this. And the Ministry of Works and Housing has been very particular in following this track. And like Tari said, yes, you want to move passengers, but there is no money really in that, because that must be subsidized. So where do you get the money to do that? That must be in cargo. So how do we move our goods, rather than being stuck on the highway for so long, move our goods through this? So that's why we're working on that. And Tari, let me tell you, there's so many opportunities where you can come in. Under the zero oil plan, we're looking at what we call STEP. It's a special purpose entity for transformational export projects. So I'd like to share that with you much later on what we're doing. Also of interest to you will be domestic export warehouses. This will help us to reduce cost of business by MSMEs, exporting companies through this export warehouse. We recently ran some adverts with the Nigerian Ports Authority on setting. We're looking particularly at Tinkan and Apapa ports, so we can decongest that area. We also work on common facility centers, process centers, really, for many of our commodities, shea butter, cashew, etc., to mention a few. Now, we are also looking at cold storage facilities. We're working with NACO and SACOL at the airport, and we hope to build a few more at various plants. These are our 22 priority products that we are looking at, saying, look, Nigeria, you cannot continue and just sending your foreign exchange. Because really the problem with Nigeria is that we're already diversified, but we're not earning foreign exchange from that diversification. Our foreign exchange is 90% from oil. So we're running now an export expansion facility program. And that goes to the question that the guy asked on is commodity trading, which it's a one-year program under the federal government, under the Economic Sustainability Plan. We're going to be helping many of our export companies on what we call COVID relief. And we're also running the Export Development Fund, which is targeted at SMEs and MSMEs. We've had about 3,000 applications so far. We're considering them, and that is what we're doing. So, like I said, is Export Development Fund, market development, capacity building. We're hoping to get more certifications along this line. We're looking at organic certifications as well. I talked about the export aggregation and then trade facilitation, that's building export trade houses on the continent, because we're really looking at the African continental free trade area. And the idea is to build an army of exporters on processed goods, because the Zero Oil Plan is also talking about not only commodities, but look, adding value back in Nigeria so we can create employment and trade. So that is that on what I wanted to point out, and I will.
If I can just follow up on your, I'll actually have.
Yeah.
I want to follow up on your short presentation there. Thank you very much for it. And you more or less invited Tariye to collaborate with the government in what it's doing here, and I'm sure she'll be happy to. But then I'm sure she will also mention that these things have to be connected. And I think she even spoke to the point that even if you are going to locate an inland port, you still need infrastructure to get to facilitate trading and the usage of that facility. So my question now is, if you can just speak to, and very briefly if you can, maybe the short to medium term priority initiatives, which may not necessarily be completely government driven, that would help to address some of the issues that this person has spoken to, which is transportation. We all know how difficult it is to work with the ports right now. Is there a short to medium term plan to perhaps use alternative ports? I just want to hear a little more about that. If you can speak to that briefly, sir.
Okay, on a use of alternative ports, we're promoting that. In fact, just last month, we did over 7,000 tons of cocoa from Calabar port, which had never been used for that before. And that just tells you, because we're saying, look, we have other ports other than Lagos, and now we need to move away from Lagos because of the congestion. So we actually did the cocoa from Calabar port, which was very interesting. Over 40 years, nothing had been done on that port. So we're working with MPA on trying to get other ports ready. There's no point in having a cocoa plantation in Calabar and then having to export through Lagos when there's a port right there. It doesn't make sense. And that is what we're looking at. But they're very, in international trade, there's so many factors that tend to make this thing. Then you are looking at the coastal line there that must be safe and secure, because then ships are coming in and then the insurance cost is extremely high, and the cost is passed on the exporter again. So you won't want to go there. Then some ships don't want to come to that place. So you are looking at the whole security logistics as well. So that is why it's under the ease of doing business committee chaired by the vice president. You are looking at everything holistically, and the master is involved, the transport is involved. That look, that's the only way this can happen. In the short term, we must decongest Lagos. And let me tell you something that we just in the last 2 weeks happened to us. We had over 7,000 containers of goods at the ports. It couldn't go. Why? So we had to investigate what was causing this gridlock. And lo and behold, there is a shortage of containers internationally right now. So the shipping companies prefer to take empty containers out. So we had to clamp on them with MPA under the Committee on Ease of Doing Business, Ministry of Transport, that listen, shipping lines, look, we won't take your goods if you don't take our goods out. And with that, we are able to immediately move 700 containers of cocoa out. So sometimes, you know, there's so many issues involved in this. It's not just face like, the port is congested. Why is the port congested? Yeah, because they were not moving it. And NPA designed an ecosystem, designed so many things, but we still have that gridlock. So we continue to face many of these problems and we tackle them as they come. So now we've resolved that. We know our containers will go now, and that might decongest the port and make Apapa even livable again. So those are some of the issues we face, and we're working on them.
Okay, thank you very much for that. Okay, let's bring in Ade to chime in now. Again, if you can still remember the question, this is a frustrated person who would like to get involved in this exports, very interesting export space. Olam obviously is someone that will understand that a lot more so because of your role as the head of the agri group at NASIMA. So tell us, what will be your response to this person?
Well, interesting conversation so far, and we need to unpack a lot. And spoken to the fact that anything we want to do with respect to export is all based on logistics. And it's important again that you need to categorize the players. You have the small players, you have the big players, but the small players too must come in and be supported by the big players. Shagun was speaking to the ports and what has happened with regards to decongestion. Very, very true. We at Olam are one of the largest exporters out of Nigeria: cocoa, cashew, sesame, ginger. And the frustrations we face on a daily basis, it's nerve-wracking. And for us, being able to get your container out from Apapa is Herculean. But with this ETO system, there seems, it's just something that has just started, where you have an electronic tracking system where if you're not called up, you can't come into the ports in the first place. So that's a good way to start. But port efficiency needs to be improved upon. Okay, we were talking about rail transport. Rail transport, to a large extent, what has been encouraged is rail transport for passengers, not rail transport for goods and services. If I'm taking my cocoa from Calabar, for example, I should be able to put my cocoa straight from Calabar, from Ogoja, straight to Lagos, okay? But what they often complain about is that if it's always one way. So if you're bringing the cocoa from Calabar, with going back to Calabar, they go back empty. Okay, so that's usually the complaint. So it's one-way traffic rather than two-way traffic. So these are some of the challenges we face. But with respect to the particular question he spoke to, export is not as difficult as that. Again, the Nigerian Export Promotion Council have courses and have programs that they run for exporters, in which some of my members in NASIMA are benefiting from. So It's important to have interagency cooperation and making sure that you talk to the right people and to the right persons. And with that, I think we should be able to improve upon our exports.
All right, thank you very much for that. Wow, I have so many other panelists to bring in here. So there's this question here by Femi Bakari that I think we should unpack very briefly. It's a very good panel, extremely good input from speakers so far, and a lot of emphasis on agriculture, and rightly so. Now, processing for value add, cold storage are key, but most importantly, power. Without adequate and reliable power, this comes to naught. What is being done with regards to power at the ports? And I know that we have Funshade Emi from Fenchurch here, who can speak to things relating to power. Maybe you want to just speak briefly to this comment, and then I think I will have to take this perhaps again to Mr. Wolowo, because he's the chief promoter, if you like, of export activity, non-export activity, powering the port. But Funsho, do you want to speak to this whole power conversation?
Good morning, Wally. Thank you very much. Good morning, everyone. It's a pleasure to be here. Once again, welcome everyone. To speak to the power situation, it's not very, very straightforward. So let's start. Obviously, everyone knows that power is a key infrastructure for Nigeria's trade growth. Agriculture, obviously, is the second main export after oil in Nigeria. And as Mr. Emmanuel Asek said, we actually need to add significant value to raw materials. So processing is key to getting that done. I know, I mean, the African Development Bank setting up agro-processing zones in Nigeria. Extensive discussions have occurred with that purpose. And focus is, look, we need to decentralize the power sector in some way. Our focus is the captive space, where we work with manufacturers and work with obviously commercial and industrial customers, where we can provide them with captive power, and that can help them focus mainly on their core. To do the companies in some situations to say, look, let us take this infrastructure off of you. We can take it off of you, manage it, run it on your behalf. And that way you can just simply focus on running your business. Manufacturing is vital, obviously, to the growth of GDP in Nigeria, and all that. And it's very simple. Look, let us take this off of you. At the moment, the alternative market in Nigeria is over 13,000 megawatts of power. So the grid is only available to take over maybe between 4,000 and 5,000 megawatts of power. And we've had different situations of grid collapse where there's total blackout. So that's not sustainable. Obviously, that's definitely not sustainable. We think that in addition to that, we think the opportunities are available, and maybe in addition to discuss with maybe Manufacturing Association of Nigeria, to have them as part of the discussions, where we can have maybe an industrial tariff system or something, a tariff that works for the industries to say, look, power is not cheap. You know, there's gas issues, all of that, all those issues, you know, fueling issues. So let's try and work and find a structure that works for everyone, whereby, you know, the gas infrastructure is in place, the capacity tariff also is in place, and that way the manufacturer doesn't have to bother with anything else. I think that is important, and obviously the investment, the financial institutions would obviously prefer in some way that sort of structure, because it also allows them to see the whole value chain and see where the money, how the money comes out from the end. Also, in addition, there's some in the industry. I know that there's the Power and Aviation Intervention Fund by CBN. In addition to that, there's also the Nigerian Infrastructure Debt Fund as well, managed by the guys. Yes.
Chapel Hill, yes.
And we've had Chapel Hill, yes, and we've had extensive. I mean, we work. You know, they seem to provide long-term debt, you know, financing. We would like to see more instruments in the market. That also allows us, you know, allows better deals to happen. Also, as project developers, and which we're an infrastructure development company, what we'd also like to see is an option whereby, you know, these instruments provide long-term financing for yeah.
I'm so sorry to jump in, Funsho, because of time, but if you can speak very briefly to the issue about the ports. So powering the ports, is that something that we can, quote, take off the grid, or would you even recommend that is the way to go if we're going to take the issue of exporting seriously, given the realities of Nigeria's grid situation? If you can speak briefly to that.
I mean, yes. Yes, obviously. I mean, the thing is, there has to be, there needs to be some level of economies of scale. So, for example, you can have 3 or 4 customers that you're providing power to in a certain area. When that happens, obviously with the regulations with NERC, you now have to involve the discos in that discussion as well, right? So as things move forward, the discussions with the discos that's critical. And there's gas infrastructure that allows us to provide power to the ports. That's not a problem at all. So for us, we think it's key because obviously you require infrastructure for cold storage at the ports. You require infrastructure, obviously power rather for cold storage, for just powering your equipment and all of that stuff, even at the ports. So for us, we think it's important to be able to provide power to the ports, and that's obviously very possible. Just to answer your question in a nutshell, yes.
So Mr. Awolowo, and if you can give me like a 30-second response, I'll appreciate this because I need to go to other speakers, and we have so many questions to run through. This issue about getting power to the port, because he mentioned something like cold storage, for example. How are you thinking about addressing that issue? Because otherwise it's a non-starter. Nigeria simply cannot get involved in that in certain types of exports.
Yes, thank you. We're going to be investing a lot of money in that, working with the private sector. We're NPA and the airports, Federal Airport Authority of Nigeria are working on us to give us areas for that. Like I said earlier on, we're working with SACOL and NACOL. We want to increase what they have at the ports, for cargo. The one very important one is the cold stores that we're going to be looking at, and we want to power many of them with solar energy. So we're looking at scaling up from what is already existing, and particularly at the ports. It's very important that we get the reefer trucks ready to move these goods for our exporters. We're going to be doing that. Government is going to be providing that kind of incentive, to help them, so they won't be paying for that by themselves. That's part of the incentives we'll be giving to exporters. So work is on this, particularly on the export expansion program where we're driving now. And in the next 6 months, many of these things will be in play, and exporters can benefit from
6 months.
So it's
okay.
Yeah. So they should be ready for many of these things opening up. Indeed, the whole federal government has looked at now and taken export as a priority, like I said, to drive the zero oil plan. So it's good news for us. Many the MPA would tell you as well. We wanted one designated a terminal for exports, but we found out that all the terminals, you remember, they've been privatized. All of them want to do export, so we can't limit it to one terminal. So we're now, most of them have to upgrade many of their facilities to take. Nigeria has been an importing country for so long, and that's the challenge we have. Thank you.
Okay. Thank you very much. I think for me, the biggest takeaway from what you just said is that you're actually providing specific guidance. So in 6 months, we're hoping to see some of these action on some of these points that you've spoken to. So thank you so much, and I hope the music to the ears of many who would like to export. All right, I have left you and Isadiku just sitting and listening intently, but now I need to engage her. Now, she is an advocate for investments, and we need investments. We have a couple of questions for you, and I'd like you to I'll just like to pose them to you as you give your comment. The first one is from Fidelis Onu, and he's saying, what is the end? Oh, sorry, not that is for the NEPC, not for the NIPC. I thought that was for you. Okay. So I got that wrong. Okay, so Tunde would like to hear, we would want to hear from the NIPC, especially regarding my earlier question on identifying a unified platform for African economies to collaborate on the African Common Free Trade Area freely without external influence from the likes of China, France, etc. So I wonder if that would be a tough one for you, Yewande, but as the advocate for investment into Nigeria, I would really like to hear your perspective on this point. Collaboration, having the African Common Free Trade Area as something that we want to succeed at, and we are taking very clear and definite steps to make that happen. So, Yewande, would you like to take a stab at that?
Yes, well, good afternoon all. I greatly enjoyed the presentations that were made, and I look forward, like other participants, to getting copies of the documents. In the context of the AfCFTA, clearly, I am one of those who believes very, very strongly that it is in Africa's best interest and that it is in Nigeria's best interest to be fully supportive. We should be tentative in responding to the AfCFTA. We should be upfront, as many countries expect us to be, to lead this charge. Because Nigeria is already positioned as the largest economy on the continent, in my own view, Nigeria stands to be the largest beneficiary of the full achievement, of the objectives of the AfCFTA. As has been mentioned by other speakers, obviously there are challenges that need to be addressed around infrastructure. And the competitive advantage we have, that in my view makes us the target, the ideal country to use as a base for leveraging the AfCFTA. That's my view. And I say it from everything that I see sitting in government. We are the ideal base for leveraging the benefits of the AfCFTA. We cannot take full advantage of it though until we address the challenges, and infrastructure is a big part. Trade, it is fundamentally a trade agreement, but you have to address our trade facilitation challenges. If goods cannot come in easily and leave easily, then we cannot fully leverage it. That's apart from the other issues, that investors tell us about all the time: competitiveness, security, and the like. But in the context of Africa pooling together and doing what is in Africa's best interest in relation to this agreement, I don't think we need to look further than the AfCFTA Secretariat. That is precisely what it was set up to do, to represent Africa's common interest, to bat for Africa in that context. So the role, Nigeria's participation in the matters relating to it, it's the same way that we took the front seat on negotiating the agreement, that we need to take the front seat on the outstanding protocols that still need to be negotiated to ensure that they are considered from Africa's perspective. In relation to the development of infrastructure and sitting as an investment advocate, Andrew made a comment that I thought was an important point. And it is about the barriers or the standards you need to meet to access the right kind of capital for funding, your objectives. Some kinds of capital can be easier to access, but may not necessarily in the long term be in your own interest. The reality is that capital always comes with strings. For some, the strings relate to governance, transparency, and the like. For others, it relates to not only the returns they will get on it, but perhaps access to resources and the like. And we need to balance the governance cost of accessing certain kinds of capital with the access to other assets that come with those who don't have governance obligations, but they also want a return. But everybody wants a return. I don't know whether it's clear,
sorry, I was muted. Yes, I hear you loud and clear.
Yeah. Now, in the context of, so in the context of fully making Nigeria ready, the issues that we need to address for our readiness things, ease of doing business is a big part of it, and there's a big focus on ease of doing business, but also bringing the private sector, in my view, not currently it feels somewhat like the private sector is almost at the fringes of the plans to develop infrastructure. And the private sector cannot be at the fringes. Tari made a comment that government cannot fund it alone, the private sector cannot fund it alone as well, especially given the reality of government's finances now. I think the government will be better positioning as a de-risker. So de-risking projects for investors. A PPP model is what we strongly advocate for, which means that there is active government participation, but it requires the private sector to be at the table. But we need to take the private sector from the fringes to the front and center of both the development of infrastructure and industrialization. We also need to make sure that when we do it, that we do an approach that is inclusive. So we need jobs for our people, not just jobs for people who are highly educated, but jobs for young people, jobs for unskilled people. So the funding model needs to reflect the aspirations, not just from a fund generation perspective, but from an inclusive job creation perspective, so that it sort of trickles down. Otherwise, you have these developments happen, but there isn't a sufficient trickling and wealth creation and raising living standards and the like. I will stop there.
Thank you. Thank
but
you
I hope
very
I addressed
much.
the question.
I think you gave us some high-level thoughts on it. Yes, absolutely. Thank you. But there is one that, in a sense, it's to this point. But I'll pose this to Emmanuel. But before I do, as you can see, we are sort of running behind schedule. We started slightly late, and there's so much to unpack here. You can see we have well over 20 questions unanswered. So here's what I'm going to appeal to our speakers to do. If you can take a look at the Q&A field, and as much as you can, please, if you can speak to the questions that are raised, it will help us a lot, because I also have some questions that were posed before the event, and I want to even get to some of those now. So in a sense, we have, in quotes, a ton of questions to still unpack. And I think efficiently, with the help of our panelists, we should be able to touch many of them. So I want to pose this one to Emmanuel, though, because I think this was a very interesting one. It's from Richard Akerele, the CEO of Airline Services and Logistics PLC. So this is a logistics company that serves the airline industry, and there's a bit of a background to it. So I'll just pose it to you this way: how does the AfCFTA intend to level the playing field on tariffs on items bought from outside the continent and assembled in the region? This is not clear. The devil is in the detail. Will there be free movement and no visa requirements? Discrimination shows up in little things. So in a recent trip to Accra, as a Nigerian, I paid $50 for my COVID test at the airport, but my partner, a Rwandan, had to pay $100 for the same COVID test because it was from outside ECOWAS. This, and I am sure others such discrepancies like this will need to be addressed and organizations harmonized. So I'm not expecting you to speak specifically to this, but let me go on. Now, travel by air in region is still relatively expensive and schedules infrequent. It's sometimes cheaper and easier to fly out of and into the region to get to one's destination. We have airport infrastructure, but what is the policy on open skies going to be like? Will there be harmonized landing, parking, and passenger taxis, or indeed subsidies for regional airlines in these areas? There have been plans for trans-African highways for years. Railways would be one of the best ways to move goods and people. What plans are in the offing here, given the need for standardization of rail lines? So he has spoken, in my view, to a lot of high-level stuff that we really need to think about if the AfCFTA is going to work. Now, I know the Afreximbank is thinking about many of these issues, so I was wondering if you had any response to the points made by Mr. Kerele, Emmanuel.
Yeah, thank you so much, Wale. So that's a very comprehensive one, like you said.
Yes, it is.
Getting into the real detail of this, the devil is always in the details. I think there's still a lot to do in terms of just trying to straighten things out, around the implementation and execution. I know that countries, are coming together, having conversations. Of course, on the tariff side, one of the slides that I shared, actually talks about how they're going to migrate, from non-essential, what's called like, there's a structure for moving, tariff over a 10-year period between different countries. So you have some group of countries called less, non-developed, and then the other ones are like the more developed countries. And the buckets of countries would have to, benefit from that structure. So in a period of, say, 10 years, you have this being harmonized through. Now, today, do I have answers to Mr. Akerele in this forum? The straight answer is no. However, I'm very well aware that AfreximBank is at the middle of, a number of these discussions, just trying to see how to debottleneck these challenges, because like Ewande said, there's no point, setting out to do something that, you do not have all the elements that will enable you to deliver this. So
I'm so sorry to interrupt, Emmanuel. I'm so sorry to interrupt, Emmanuel, because I think you are leading to a point which I think is very important.
Yeah.
If we're going to make this work,
yeah,
there's so much involved in it. In fact, many will suggest that there are a lot of things we haven't thought about, that simply because of the way Africa is organized, even from the regional to the continental laws, some things are going to be very difficult to make happen under the AfCFTA. So here's what I think needs to happen. There has to be some kind of advocate, and I think the AfreximBank has a great opportunity to do that, to engage the authorities at the AfCFTA Secretariat, at the AU level, to begin to chip away at many of these things. And I think it will be very important for those who will actually like to do interesting projects. So for example, the issue about the railway, the transcontinental railway that he spoke of, potentially, maybe, I'm just using an example here, GE is interested in this and would like to get involved one way or the other, but somebody has to be the advocate. Somebody has to engage the various governments and institutions that can make such projects happen. So I think it's very important that the AfreximBank steps to the table and make itself available for people to engage.
No, well, you're very right. I mean, I don't think there are a lot of institutions that are, as well positioned as AfreximBank to do this today on the continent. One, you have that common ownership by 51 countries, and you have the rights and privileges as an institution established by treaty. So there's a lot that AfreximBank is currently doing, working with the AU on one side, just like you said. So we have a dedicated team, and we have all of these key debottlenecking, that we're trying to work with the AFCA, secretariat to do. So there's that engagement. There's a team in AfreximBank that is, engaging directly with both the AU on one side and then the secretariat on the other side to deal with this matter. So you're very right. These are things that are very, high up there, in the priority of the bank, because in the end, as you know, the bank has been a key promoter of getting this thing to happen, and not succeeding in getting it happen, of course, is not something that AfreximBank wants to see. So the bank has dedicated resources, has dedicated people, has dedicated time to ensure that it works with the secretariat and also works with countries around the continent to ensure that these are harmonized. There are so many things I didn't put out here that the bank is doing, something like the bond, traveling through countries, being able to debottleneck the requirement to post bonds as you get to borders, basically covering that with an insurance that if you're taking goods from Nigeria to Ghana, it will be delivered in Ghana. There are products around it. So there's so many things that the bank is doing to deal with debottlenecking the entire system. And what Mr. Akerele has highlighted are some of the things that the bank is also dealing with. I think one of the things that could be good to do is maybe after this to also create room to take on some of these and have very specific responses to parties, and not just in the response, but for people to understand what's really being done around each of these concerns that people are raising. But these are very valid questions, very valid.
Got it. Thank you very much. All right. And if I can just maybe to...
Ole, as a quick addendum to that, I think a lot of those questions as well can be addressed to the secretariat in Ghana to a large extent, because again, we talk about movement of goods and services. But before you move goods and services, people must be able to move freely in the first place. Okay.
Right.
And talking about the Trans-African Highway, we started that on a regional basis in ECOWAS, where we were talking about building. If you go across the continent, Lagos, Benin, Accra, Burkina Faso. So we've been doing that, but I just think we need to upscale, and we just need to take this much more seriously. And again, tariff removals, again, are very important discussions. A lot of countries have agreed, some have not domesticated, some have not ratified. So there's so many issues around it which we need to address. And we need somebody, an ombudsman to help us.
Right. So that's exactly my point. But the challenge I think I have with, directing people to Accra is that it may seem so far away, but if potentially there's a local partner or someone who can be taking that feedback and passing it on. And that's where I thought that perhaps the AfCFTA Bank can play that role, and maybe with some of his partners like Nexim. And I was just going to call on Mr. Yongo to speak on some of the things that Nexim is doing.
Don't forget that all countries have local trade representatives, people in charge of this. We had one who died off recently, Ambassador.
Yes.
Ambassador Osakwe. So
yes.
We have a new one as well who is acting. So we can address that there on the political front, but on the economic front, and AfCFTA, I think, will be the person to the go-to organization to help us.
Okay, thank you very much. I'd like to bring Mr. Yongo in at this point, and if you can just speak to some of the things that Nexim is doing with respect to trade infrastructure. One that I thought was quite interesting that you're involved in is the C-Link initiative. And I was wondering if perhaps you would like to speak to that and perhaps other things that you are doing to support the building of infrastructure with respect to trade.
Okay, thank you very much. I think one of the challenges we have seen is the issue of congestion along our road corridors. Railways are good, but railways are capital intensive and gestation period is long. What are we looking at? We are looking at a framework that you can bridge the maritime logistics infrastructure. And that's why we introduced the regional C-Link project. And the regional C-Link project has three components. It has a component of transit, which can help people like Niger Republic, where it has the hinterland, which you have inland waterways operation. I'm happy to announce that we are working with the Nigerian Navy and NIWA. NIWA is the National Inland Waterway Authority. They've given us the right of way, but we noticed that the channels are not navigable. So we are now currently working with the Navy so that they can survey and chart those channels, and some channels maintenance will be done. So hopefully once that is done, we are doing it as a PPP. We already have private sector partners that are teaming with us under what we call the C-Link Consortium. On offer right now, we have almost like 13 vessels and barges that are ready for deployment once those platforms are ready. We have also noticed that there's that congestion that is not helping us to be a solid mineral exporting country for bulk commodities. So one of the idle ports in Burutu Delta State is now being worked upon so that it will be improved to carry bulk commodities. And also happy to also tell the House that the federal government has approved an C-Link takes over the Ajakuta port. So we're also upgrading that. So what we are going to do is now to say that we'll be moving bulk commodities by inland waterways.
So when you say bulk commodities, can you be more specific? Is there any particular type of commodity, or is it pretty much everything? Agricultural commodities,
there's a concept
solid minerals, and so forth.
That a 1,000-ton barge can take 30 containers, for example. So what do you do with that is that you are taking 30 trailers off the road. If Dangote wants to move his bulk cement, which he intends to from Obajana, to move 1 million tons to Cameroon, where he has a calcination plant, that's 34,000 trailers. We don't even have the road, there's no rail. So it's only the inland waterways with barges that you can move that. And that's what we're trying to do to improve the movement of that. The request that we are having from just 8 commodities from 6 companies that they want to move bulk cargoes is almost about 6 million tons.
Right.
And if you can unlock that infrastructure challenges, that means Nigeria can earn additionally, as we are speaking, 1.8 billion in export of additional solid mineral. That would help diversify the commodity baskets. And that's when you can see the solid minerals trending in the non-oil export receipt. But right now, they have the production capacity, but they don't have the logistic capacity to move, even Dangote. Because that's why they're having that challenges and to move that. But that's why we feel that one of the ways is to provide that inland waterway solution. And the Burutu port, which has been built by the British and which is being upgraded now, currently as it is, what they need is just handling equipment, which the bank is working to finance it. And once they have, that means that port can bring an export of 3 million solid minerals from that port. We are trying to make it a dedicated solid mineral port because it's along the artery of the inland waterways. So that can handle that. That's the issue of logistics. It can also help the coastal trade. The congestion at the port didn't help the matter. We're trying to see if we can use Ikorodu. But just like Shegun Awolowo said, we're discussing with Calabar. Hopefully, we'll begin a regular liner calling in Calabar by one of our sealing consortium partners so that Calabar can be effective in moving some of those exports through the Eastern Corridor. With regards to the financial infrastructure in the context of issue of instrument, that's why factoring has come. And like I said, what we are trying to do is to make sure that regulations for factoring are issued by central bank. And once that is issued, like we always said it, the factoring market from our analysis is a 3 trillion naira market. Even when you look at it from the context of only those listed companies from their receivables and payables that can be factored. So this is another market that once you have the infrastructure, it will now help in the issue of providing access to finance by SMEs that are having challenges of collateral. And that's what we are saying. But to add to the mix, we're also looking at it in the context that one of the payment modes that needs to be there for our intra-African trade against the challenges of correspondent banking issues is, yes, PAPC is coming, where the window you can use your local currency to pay for export, but where people will require to have other foreign currency window, I think we think open account transaction can provide that. And because that will help us in the context of developing our credit insurance market. Because once the credit insurance market is there, it provides the kind of enabling infrastructure that can provide that. Then one of the last thing that the NEXIM is also looking at is regard to quality control and quality assay. So we are working with some of the 2 companies with international accreditation and encouraging them to set in-country accreditation and certification and assaying platform. And what we are saying them is that we can give them some risk mitigation instrument with regards to indemnifying where their turnover is low, because their issue is that say, if we set up those infrastructure, what if our annual turnover for the processing is less? We are saying with that, we can mitigate so that we can have that. I think once we have these 3 critical things, it will help us to be ready to engage in the continental free market. And with that, then we can begin to improve. Thank you. I think.
Thank you very much, Mr. Ongo, and really appreciate your contribution and, of course, supporting us at this event. Ladies and gentlemen, we have really run over. We were supposed to end this at about 11:30 or thereabout, but as you can see, it's almost 12 noon now, and we still have quite a number of questions. So I am going to try and help have us wrap this event in the next 6 minutes. And I am going to do something which I think is almost impossible, but I'm going to do a very rapid fire type response to some of these questions. Tari, if you are still with us, we have a question for you from Rakib. As an infrastructure fund, do you currently have or on your investment portfolio digital logistics solution providers and startups? Is that something that you are investing in? That can be a yes or no response to save time.
No, but he has a very good point. We're looking at it for future last mile linkages for core infrastructure.
Okay, thank you very much. All right. Honestly, we don't have more time to take so many other questions, but I saw that that was specifically to you, and I thought I should just take it. So thank you so much. I think we really have to wrap it up here, and it's been a very interesting engagement so far. Sadly, some of our speakers actually had to drop off because they had to move on to some other engagements. But I want to thank all our speakers today for being part of this. And I'd like to now hand over to Bimbo Agbolwaje from Arbiters to share a quick vote of thanks, and then we'll wrap. So, Abimbola, over to you.
Thanks so much, Wale. We're very grateful to our sponsors, Nexim, and to Fern Church, and to all the speakers, starting from the keynote speaker, Asiak, Tari, Mr. Shegun, Awolo, Mr. Adefeko, Mr. Dr. Andrew Nelvin, and of course, Mr. Yewande Sadiko and Tari. We're grateful, and I think we should do this more often. We're sharing the publicity for the event, and someone commented, "Oh, what's the use? We always talk too much in this country." That's not something we believe in. We'll talk too much, but we should put more policy discussion in the discussion of politics and social affairs, and that's how things can improve. That's how jobs can be created. That's how the government can improve its investment decisions. Not many Nigerians would know that you can finance cargo rail services as opposed to passenger rail services. People knowing this more, we believe, is will get us better investment decisions and a more efficient economy, even given the type of politics we have in Nigeria. So we thank you, our sponsors, again, and we also thank all the participants and of course our panel. Thank you so much. We'll do this again. Bye.
Thank you very much, Bimbo, and thank you again to all our speakers, and thank you very much for hanging out with us today. I believe it has been useful. I hope you have made some useful connections in the chat box. I see that some interesting engagement has been going on over the course of the last 2 hours or so. So thank you so much again, and as Bimbo said, we look forward to having you again at the next event. But we certainly hope that this is useful. Many thanks to our sponsors and partners for this. And please, if you do have a moment, do connect with some people using the chat function before you leave. Thank you so much and have a good afternoon.
Thank you. Tari, thank you for coming. We'll be hearing from us soon. We'll obviously be discussing. Mr. Adefeko, look forward to meeting you as well. Thank you.
So, thank you.
Like that.
All
That
right,
is
thank
what
you.
it's about.
Bye. Thank you all.
Well done all. It was a
Thank
great
you, everyone. Bye.
Thank you.
Lovely to see you.
Hi, Yewande. Good seeing you.
Bye.
Okay. Bye. Take care all.